Welcome back to the CNBC-TV18 budget verdict. We are now at our finale. We've been bringing you the budget architects, the policymakers who are shaping India's economic policy, to explain to us what the road ahead looks like. And to cap things off, we have with us the Financial Services Secretary, Mr. Nagaraju, and the Secretary of MeitY, Mr. S. Krishnan. Gentlemen, thank you very much for joining us. May I request you to please take the hot seat, so to speak, before we get started. Ladies and gentlemen, a big round of applause for Mr. Nagaraju and Mr. Krishnan, joining us here live at the CNBC-TV18 budget verdict. Thank you very much to our audience on TV, to our audience on YouTube, and to our participants here who are joining us live for the budget verdict. Without further ado, Mr. Krishnan, let me start by asking you, sir, lots for you to do, courtesy the union budget. Let's get started with Semicon 2.0. Semicon 176,000 crore rupees, that was the budgetary allocation. Of course, an allocation has not been provided for in the budget just yet. Lay out for us what Semicon 1 has been able to achieve in terms of milestones, but more importantly, what should we expect now for Semicon 2?
I think Semicon 1 has laid the foundations of a semiconductor manufacturing industry in India very firmly. We have 10 units which are already approved, and possibly 2 or 3 more before we completely close the scheme. The first of those schemes, first of those projects should commence full commercial production in a matter of weeks or months. And before, in a few months' time, we should have about 4 of those projects which would be fully grounded and in production, and the remaining would come in the next year or so. So I think that represents a huge and significant step forward. We would have a fab, a full-fledged CMOS fab of our own, a silicon fab, and in addition a compound semiconductor fab also of our own, and 8 other units who are packaging units in a range of technologies, some of them more advanced, some of them more conventional and legacy. It gives us a whole range of technologies to work with. So I think it's a very, very sound base which has been laid. In addition, we have also laid the base for 24 units which we have approved for under the DLI scheme, under the Development Linked Incentive Scheme, where semiconductor design is the main thing, and 14 out of those 24 have also received funding from VC funds and others to go forward. So I think there's been significant forward movement there, and the modernization of the semiconductor laboratory in Mohali, which was another component of the scheme, will also get underway shortly. So all this means that we have successfully completed the first phase, putting us...
And utilized all of the money? And utilized all of the money?
Committed all of the money. Committed all of the money. Utilization will take time because the build out will take longer. So we've committed practically the entire amount allocated for this purpose. So we move on to Semicon 2, which again, the focus on getting in more fabs and packaging units will be there, but there will be an added emphasis on advanced packaging. That is one part. But more than that, I think what we would be focusing on is bringing in the entire ecosystem, that is manufacture and the equipment manufacturers, manufacture of equipment in India for semiconductors, both for units in India and to export elsewhere in the world. The materials, gases, chemicals, all of those which are used in semiconductor manufacture, all of that, plus a substantially revamped and enhanced version of the development linked incentive scheme, so that we are able to develop semiconductors in a number of crucial areas which are important for India as a country, and we are able to have our own products in the semiconductor space which would truly enhance capability of the country and insulate you against, from a sovereign perspective, give us that necessary strategic autonomy that we need.
So if Semicon 1 was 76,000 crores, what will Semicon 2 be?
You will know.
How much of an escalation are you hoping for or asking for, sir?
What we ask for is immaterial. The decision making
what you
in government
what you get is
what we get is what is material, and that is a process, and we will get that done. Yeah.
Okay, you'll get that done. I'll come back to you in a second, but let me get the Financial Services Secretary, Mr. Nagaraju, into the conversation as well. Mr. Nagaraju, I know you will say that the terms of reference of the committee that the Finance Minister has announced have not been formulated just yet. But broadly, sir, if you can take us through the 2 or 3 key priorities that the government must address by way of this committee when we talk about re-architecturing India's financial sector.
Thank you. The proposed committee is Committee for Viksit Bharat, okay, Banking Committee for Viksit Bharat. Let me give you some numbers. I might have mentioned, the bank credit to non-financial sector is about 56% to the GDP. We are one of the lowest in the world. And we can actually, many countries are above 150%. Now, that's one. The second challenge is we have between 300 to 350 million people who are not credit linked. They are financial inclusion we have achieved by opening the bank account, but credit inclusion we have not. They are credit deprived.
Okay.
2. Now, there are few issues are around. One is, of course, the regulatory requirements of capital. Can we do something about how the capital, how much capital can have ratios, reserve, and how do we hold that capital, and then how do we look at the banking scenario? We have the scheduled commercial banks and small finance banks, and we have cooperative banks, of course, rural banks. All kinds of banks we have. So what kind of banks we require going forward 2047? I think many of us know, not a single Indian bank is, I think, in the list of top 40 banks. I think so a country, we are likely to take over, to become 3rd largest economy in the world in a short period of time. We don't have a
bank in the top 10.
Bank in the top 10. Top 10, leave the top 10, top 20.
Yeah.
So that's one, how do we do it? So we wanted this expert committee to look at what kind of regulatory policy ecosystem we need to build so that the adequate bank credit flows to the country, which can help India become developed by 2047.
Okay. So, that's an important aspect that you brought up there. And let me understand from you, when you talk about regulatory ratios, so do you believe that the current system, the current requirements, the current buffers may perhaps be onerous, that requires a review? Do you believe there needs to be more flexibility? What's the thinking there on what needs to be done as far as the regulatory ratios are concerned?
Yeah, these ratios were fixed long time ago. And the things have changed now. They are aftermath of this, the financial crisis. Now, there are better ways of deploying capital.
Okay.
And there are better ways of asking the capital to be held in different instruments. Now, all these things are possibilities which the committee could actually look at.
Okay, so that's an important one, because this was not something that we got from the Finance Minister. You've given us a little bit more color there on what the committee will do. Outside of that, the big question that everyone's asking, and I know I've been trying to push you on that, is it also going to look at consolidation of public sector banks in the attempt to make 1 large or 2 large public sector banks that could then be in the top 20?
No, see, we have not yet finalized the terms of reference, as you have
I already said that. I already said at the start, sir.
Previously referred. Possibly it could include anything. This is the banking. We are talking about the banking for Viksit Bharat 2047. The banking includes everything. I don't think anything is off the table.
Okay.
The committee, when they formed and the committee are finalized, they can actually take on anything they want to recommend. And in any case,
would you like them to take this up?
By the time we don't know. See, in any case, the government has the ultimate decision-making power to accept or not. But they can consider anything relating to the banking.
Okay, I'll come back with more questions on banking, the future and the present in a second. But Mr. Krishnan, let me come back to you, and let me also get my colleague Ashmit, who's tracking the sector that Mr. Krishnan looks at very closely. But Mr. Krishnan, you know, the other significant announcements that came in from the budget was this, which nobody believes, this 20+ year tax holiday as far as the AI data centers are concerned. And people don't believe the fact, because it's too good to be true, that, you know, you're actually being given a 20-year tax holiday in that sense. If you can explain to us how quickly you believe that this is going to actually translate into action on the ground, and whether this could perhaps be, and I was asking the CA this as well, because he brought up the STPI example as an example of the entrepreneurial mindset of the state, whether this is such an example of being able to create an industry like we did with the software export industry 3 decades ago in India.
See, I think as far as the data center initiative is concerned, you have to look at it in two ways. There are 2 or 3 paras there. It's not just one paragraph. The idea we work on always is that we don't export taxes, right? I mean, that is a basic economic premise that we work on. So for data centers which are intended for storing data for customers overseas, sending it back, and with no connection within India, and it's a complete transaction which is related to that, it's an export-oriented business, literally, and that is the reason why it does not suffer taxation. So that is the simple logic there. And so I don't think we should worry too much about the duration of how long that is.
Nobody's worried, sir. They're in fact very happy that you've given a 20-year period. No one's worried at all. They're celebrating.
I don't think, I mean, I think it is a treatment in tune with economic principles, that you don't export taxes. Now, whatever business that they would do within the country would have to be done through a resident entity. Correct. So that the idea is that that would be transactions which happen within the country, services provided within the country, and which, for a level playing field, everyone has to have the same level of taxation for that. So I think that is the clarity that is really needed in this particular case, that we are following a principle, and it's also in tune with what the Revenue Department and the CBDT normally follow, which is that we don't like to exempt, or we don't like to create a class of people who claim that they don't want to be permanent entities in India and completely escape taxation. So the idea is that entities will be permanent establishments here in India, right, but will not suffer tax, because the principle is that tax is not to be exported. That is the philosophy behind this.
Fair enough. Ashmit?
Thanks for that, Shireen. Mr. Krishnan, firstly, thank you so much for joining us. Shireen was pointing out Semicon 2.0. She made a reference to the tax holiday for data centers. We heard in the budget about the IT safe harbor protection that has been granted. We also heard about AI going forward. The budget has been kind to you. In lighter vein, did you go back home last night thinking maybe you should have asked for more?
I only felt that it should have been called a technology budget. I think in terms of how it could have been branded, I think there's a lot intended for technology there. And the ministry and the various sectors related to the ministry also put together articulated all their requirements, which many of them were satisfied. So it's not a question of could I have asked for more. There were 1 or 2 things which were left out, which we will go back with. But I think it's on the whole, the sector and the industry is extremely happy, and they have conveyed their feedback to us as well in terms of what the budget has managed to do. It's not only in terms of allocations. There's of course the announcement of the second phase of the India Semiconductor Mission. There is an enhancement of allocation for the electronic component manufacturing scheme, all of which are significant and important to support manufacturing. In addition, all what has been announced in terms of simplification of tax structures and simplification of procedures both for IT, for data centers, and for electronic manufacture. I think all of them are extremely significant in terms of encouraging the digital economy in India and in terms of taking us literally on a technology path, because ultimately if you want to be a developed nation and if you want to grow fast, a Viksit Bharat by 2047, you have to ride the technology wave, and I think that's what the budget has signaled.
I think that's the one aspect I had missed out, flagging the ECMS increase that we've seen from 22,000 to 40,000 crore rupees. But while we're on the subject of electronics, Mr. Krishnan, I would just want to ask you, just help us decode some of the numbers that we saw. There was, while there have been increase in allocations for the likes of ECMS, the PLI component has seen a downward projection in terms of what the outlay needs to be. Can you help us read those numbers? Does that mean that there will be no perhaps mobile PLI 2.0, or will it be there in a very different form and structure?
I think it does not mean that there will be no more PLI 2.0 for large-scale electronic manufacture, which is a formal name for the mobile PLI, what is commonly known as mobile PLI. What it means is that we are winding down the first phase, and the allocations next year are primarily intended to pay the bills for the last quarter of the current year, because up to the third quarter we would meet within current year's budgetary allocations, and it's only effectively for just about one quarter for most of the big companies, and for the smaller companies maybe the year's requirement. So that is what we anticipate would be the money we need next year, and that has been fully provided for. The PLI 2.0 scheme is still being, the consultations with the industry are still on, and we will finalize the scheme. And as and when it is finalized, there will be a provision in the budget. I'm fairly confident of that. That was our experience with ECMS. That was our experience with the AI program, with all of them. So I don't think I would worry very much about, whether the provisions are there or not there. We will get them when we are ready to spend the money.
You'll get them when you're ready to spend the money. But Mr. Nagaraju, let's talk about the money, sir. And let's talk about also the future of banking in India in the context of technology. What we have seen is the big move on digital transactions, UPI touching record numbers practically every month, the advancement of many fintechs. Now, as you look at this committee, do you believe that there is also the need for regulators and for this committee to look at the next phase of Indian banking, which could involve licenses to digital banks as well?
Hello. Yeah, one thing is you are right to note that increasingly the Indian banks have become much more digital. The journeys, most of the journeys for large number of creditations are through the digital thing. We are UPI, almost we do almost 50% of the total transactions of the world happens in India. Now coming to the digital bank, in some of the services of the banks are completely digital now also. Let me put on this. Let's say, suppose you want a retail loan. IDFC will actually sanction you within few minutes. That's our Vaidyanathan has been confirming to me. And similarly, the SBI has confirmed to me that the MSME loans, they actually sanction within 10 minutes. And all my banks, in fact,
they're giving Swiggy and Zomato a run for their money.
But my only caution to them was they ensure that your software engines ensures that underwriting principles they follow, and no compromise on the quality, and ensure the loans are sanctioned.
Ensure that the loans are sanctioned, but you didn't answer my question about digital banks.
No, what I'm saying, see, in a different situation, the difference between the completely digital and the traditional banks is actually this is a blurring, okay? Banks increasingly becoming digital. Now I should not praise twice IDFC in a night, but look at the IDFC thing. They have been, most of the services they provide online, in fact digital, even though they have a large number of branches, but they are digital. Similarly, now some of these small finance banks also digital. And then even the behemoth like SBI.
SBI, yeah.
No, nobody needs to go to the bank branch now. 2.0 provides every service. Every service. Now I think going forward, I think that maybe is only is a semantic difference only.
Okay, a semantic difference only. Mr. Nagaraju, 2025, all of your private sector banks, many of the private sector banks saw many deals happen, including IDFC Bank here with a lot of FDI coming in. Are the public sector banks feeling left out?
No, these deals happen, IDFC happened, fine. But the remaining two are actually led by the public sector.
Yes, in a way.
See, so you can't say these two deals, the biggest deals, happened in the public sector.
Yeah.
So
but to Mr. Krishnan's point about wanting more, have you put forward the recommendation that at least for public sector banks, the FDI limit should now be enhanced?
See, one of the ways of enhancing credit infusion to the society is having the adequate capital with the banks. The one way of public sector banks is whether the government puts in equity, enhances, or the existing equities is diverted. Now, the two, of course, the domestic as well as the foreign. Now, currently we have about 20% FII allowed, and there are discussions on to enhance this. As and when we enhance it, I think
to 49%.
Yeah, whatever is the percentage, and the CNBC will be the first to know.
We will be the first to find out. That I'm sure of. That I'm absolutely sure of. But under active consideration. Okay, Mr. Krishnan, I want to come back to you now, sir. And I think one of the big success stories as far as India's manufacturing sector in the recent years has really been what's happened as far as the mobile manufacturing scheme is concerned. And I want to understand from you, on the back of the lessons learned from that experience, what should we now do to ensure we can replicate and scale that success?
I think, you see, mobile manufacturing has been a true success story. There are certainly lessons which we have learned from that in terms of first achieving scale, making sure that we achieve scale, and actually locating within India the most labor-intensive part of that process to begin with, which means that it actually generates the kind of jobs, and that makes it truly appealing as well. So those two factors, I think, are very important. The next stage is to deepen the entire value addition within that sector. Also recognize and be strategic that not everything you're going to localize. You're going to localize those elements which are crucial to retaining a grip on the industry in the days to come and making sure you build that ecosystem, while recognizing that these are global value chains and certain things, some things you will not necessarily manufacture in the country and you will rely on global supply chains. What you will need to build resilience is a diversified supply chain to make sure that you have it from multiple sources. These are all, I think, important lessons, whether we are talking about IT hardware in the future, whether you're talking about other forms of electronic manufacture for various other goods, because practically everything that we consume today has some element of electronics in it. For all of those, I think these would be important lessons. The same could also be true eventually in other sectors of the economy, if you're talking about, auto components, if you're talking about a whole host of other manufactured products. But I think the critical point is that you have to achieve scale. Because without scale, it's very difficult to localize supply chains and also to sort of actually grow to an extent. And to also have the kind of impact in terms of the employment impact that electronic manufacturers managed to create so far.
I just want to labor on that point, Mr. Krishnan, as far as electronics and especially smartphone manufacturing is concerned. When this scheme was first envisioned, there was talk of how we would want global champions as well as national champions. Now we've realized scale as well. We're exporting, we're largest manufacturers of third largest, please correct me if I'm wrong, third largest manufacturer of smartphones. What I want to ask you is that, having traveled the distance that we have, what is the missing ingredient for having a national champion? We don't have national companies, Indian companies that are competing with the Apples and the Samsungs of the world.
I think one of the, number one, we are the second largest manufacturer of mobile
I stand corrected.
So let me sort of correct the record there. But I think one of the critical things which we need is a national champion, is a national brand more than anything else. I think one of the key aims of MeitY is that we need more product companies, and we need more product companies not just in electronics itself or mobile phones, but also in software and a range of other products that we create. I think that is something which we certainly need, because that's where the significant value addition takes place, and that's where you have far greater control. So it's a clearly articulated goal of the ministry that we must have product companies in each of these areas, and we must have a product company which is there in mobile manufacturing as well. An Indian brand needs to do well in that space. I think